Beau World Omnimedia Preqin Quarterly Update for Q2 2014 Hedge Funds. Insight on the quarter from the leading provider of alternative assets data. Content includes performance update, analysis of the performance of hedge funds and the latest benchmarks, hedge fund launches, a look at hedge fund launches in Q2 2014, Major League tables, a review of the largest hedge fund and fund of hedge funds managers, investor mandates, the latest hedge fund searches, and mandates issued by investors. The Preqin Quarterly Update can be downloaded under the data pack preqin.com/quarterly update in an Excel spreadsheet for your analysis. And hedge funds in the forward had a volatile start to the year, with the performance in Q1 2014 representing the worst start to a year since 2008. The All Regions and Strategies hedge fund benchmark was also in the red for April. However, positive returns in May and June improved the overall picture, and taken benchmark year-to-date returns to 3.86%. This is only marginally behind the 4.28% recorded by the hedge fund benchmark at the same stage last year, and this will give managers confidence that they can post more encouraging returns in the second half of 2014. However, the fact that there have been 3 negative months already in 2014 compared to 2 in the whole of 2013 may be of concern to some investors who are seeking consistency in returns. Event-driven strategies funds continue to post impressive returns, and this benchmark has produced positive returns in each of the 6 months of 2014, taking year-to-date returns to 5.24%. Investors are taking note of this consistent positive performance by looking at opportunities within the event-driven space. Event-driven was the second most targeted strategy in searches initiated by institutional investors in Q2 2014. Micro strategies recovered from a disappointing Q1 to be the top-performing strategy benchmark in Q2 with returns of 2.8%, taking year-to-date returns to 2.85%. Roughly 0.05% was gained for the whole year. Last month, there was a recovery for hedge funds focused on emerging markets in Q2 2014, with average returns of 4.33%, making this the best performing Preqin regional benchmark during the quarter. Despite the positive performance, fund managers are perhaps being put off by the volatile nature of these regions, with just 2% of the fund launches in Q2 focusing on emerging markets, a 5 percentage point decrease from Q1. Following on from some strong performance in the region in Q1, there has been an increase in both the proportion of fund launches represented by Europe-based managers and the proportion of fund launches focusing on investing in Europe in Q2. However, Europe-focused funds have not performed as well during the second quarter, with average returns of 0.5%, making it the worst performing of the regional benchmarks. In the previous Preqin Quarterly Update hedge funds, it was noted that there had been an increase in the number of hedge funds launches in the first quarter of 2014. This hinted at the early stages of a revival in the sector, and there's been an increase in the proportions of investors targeting multi-manager vehicles during the second quarter. 29% of searches initiated by institutional investors in Q2 included a mandate for commingled funds of hedge funds, up from 21% in Q1, while 10% were seeking new investments via managed account funds of hedge funds. Despite the relatively volatile start of the year, investors are continuing to allocate to hedge funds, and there was a relatively healthy number of new searches and mandates issued during the second quarter. Hedge fund managers will be looking to build on more encouraging performance in May and June in order to continue attracting inflows from the institutional community. A relatively successful second quarter of the year for hedge funds, 2.51%, saw returns outstrip first quarter gains 1.3% and represented a substantial improvement over the same period last year of 0.22% positive. The quarter also bucked the trend of recent underperformance for the managed futures industry, with CTAs positive 2.15%, rebounding from a negative first 3 months of the year at minus 0.34%. Funds of hedge funds at plus 1.39%, and UCITS vehicles 1.72% versus my plus 57% return in Quantmaster. Lagged behind, although both improved on both the previous quarter and Q2 2013. MicroStrategies funds have struggled of late, but this was the best performing core strategy of Q2 2014. With the return of 2.8%, a significant improvement on the same period of the loss of 1.3% last year, and the previous quarter of positive 0.05%. Funds employing event-driven strategies have had the most productive first half of the year, with a positive 5.1% 5.25% return, with CTAs with at least 1.8% returns. April was a poor month for funds globally, although returns were positive. The board in May and June, funds invested in emerging markets saw their fifth consecutive positive 3.81% month for the year so far. North America remains the leading region globally over the last year, buoyed by 10 consecutive positive months and returning positive 15.91%. The S&P 500 hit all-time highs throughout the quarter, and unsurprisingly, hedge funds lagged the price return over the last 3 months with positive 4.69%. Hedge fund returns have been overshadowed by this equity market performance on a quarterly basis since Q4 2014. Hedge funds for Q2 2014 returned a net return of 2.51%. Funds of hedge funds returned 1.39%. UCITS hedge funds returned 1.72%. CTAs returned 2.15%. April 2014 multi-strategy returns were 0.49%. Relative value 0.35%. CTAs 0.28%. Event-driven 0.25%. Macro strategies 0%. Long and short minus 0.36%. May 2014 strategies for net returns of a single manager hedge funds by strategy. Long short were returning 1.2% in May of 2014. Macro strategies were 1.1, event driven 0.95, relative value 0.84, multi-strategy 0.78, CTAs 0.53, all percents. Long short in June of 2014 was 1.75%, macro 1.68, CTAs 1.32, event 1.21, multi 1.01, relative 0.55, macro 2.8 in Q2 2014. Long short of 2.6, event driven of 2.42, multi-strategy of 2.31%, CTAs of 2.15%, relative value of 1.74%. And in Q1 of 2014, macro strategies were the top performing strategy of 2.8% versus event-driven strategies in Q1 2014 of 2.75%. Long short was the second most highest returning strategy type in Q2 2014. Long short returned 2.6% versus relative values Q1 2014 return of 1.47%. In the highest returning strategies of Q2 2014, event-driven was 2.42% in Q2 2014 versus Q1 2014 of 2.75%, and the third highest performing strategy was long-short in Q1 2014 at 1.26%. Multi-strategy was both the fourth highest performing strategy in the therefore most consistent Q2 and Q1 periods of 2014 at 2.31% in Q2 2014, and multi-strategies returned 0.93% in Q1 2014. Relative value paid 1.74% in returns, and CTAs lost 1/3% in Q1 2014. This concludes the presentation of the Preqin Q2 2014 Performance Update.